What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, we're going to talk about something that was tweeted a couple days ago. Main Street media obviously picked up on it, trying to capitalize on it, really cause a little bit of chaos, ruffle the feathers a little bit inside the AMC community. We're going to talk about it in just a moment. Market was a little slow today, so I was able to take some time to dive into it. I'm going to cover everything, but let's get right into it. First off, as I'm making this video, intraday, we still have about 2.5 hours till the market closes. Seems like the market's kind of flatline. You can see we're hanging around inside this gap fill on the SPY and this declining volume. Really just no buyers or sellers to be had. Today, we played a beautiful opening range breakout. It's one of the strategies that I like to play when I see a nice tight range like we have here pre-market. And when you get a blast out of one direction, you get a good retest of that level, shows that there are buyers ready to step in, or sellers if it's on the downside, and calls paid very well for everybody inside the group that decided to take that play. Just one strategy that I do go over if you are still looking to try to fine tune some strategies. One, look at this. It's called the opening range breakout. It doesn't happen every day. I really like it when you see a very, very tight chart. We played this just a couple days ago on Tesla. And like I said, when you get a gap up or gap down overnight and anywhere from between 7 a.m. On the Eastern Standard Time and after, you get that really, really tight range. When you get a blast to one direction and it's very strong, it's a very, very good strategy. Like I said, it does not happen every single day, but check it out. It's one that's been very good to me and I enjoy playing it very well. But let's talk about what was released. So this was actually tweeted from somebody, Cliff Asness, from AQR Capital Management. And he basically stated, I dare all meme stock maniacs to try and hurt us. And I had tweeted, which I don't really tweet that often, but I had tweeted, I said, who wants to make a bet that this guy is long? So I thought about it a little bit. I wasn't able to make a video yesterday. And then today I was like, you know what? It's slow right now. We had some a good run, a good push in the morning. I don't like trading when volume is low and it's slow like this because I ended up taking really trades out of boredom and it's just not good. I recommend that for everybody. If you don't see your right setup, don't take it. But let's get into this. So I don't pay for Fintel anymore, but I was able to just do a little bit of research and I'm willing to bet that this individual is long. Okay. One, this is not a massive company or massive hedge fund, therefore having a ton of money, assets under management, as well as just think from a bigger perspective. If you're trying to attract, it being located down in Greenwich, Connecticut, high paying executives out of New York City, chances are you're not going to want to promote your company as one who is taunting a bunch of retail investors, especially the 8 community. I don't think it's going to bear very well for you. But so let's take a look at this. This is exactly what I found. So these are the 13F filings for Q1 of this year. And when you take a look at AQR Capital Management, it shows that their position currently, unfortunately, I cannot find out what their average share is right now, but it finds out currently 180,000 shares. They cut 36% of their position. Scroll back over to Q4. Okay, so now we're at Q4 and it shows they cut 12 of their position. However, there's 100,000 more shares, 283, 180. So between Q4 of last year and Q1 of this year, they cut 100,000 shares of their position. Remember that 283 number. Jump back over to Q3. Now, AMC was still holding value very well in Q3. This is anytime after July 1 up until that September 30th. So we take a look at their position, 323,000. Okay, so it's 50,000 greater than what was last reported on their Q4. We're talking about Q3 of last year, 323,000 shares, 28% growth. So in Q3 of last year, which was anytime after July 1, they added 28% to their position. Okay. When we jump back over to Q2, which is when obviously it encapsulates June, they added a bulk of their position, 98%. of their position was added, okay? Or, added to. So for about almost 98%, 251,000. So if they added it sometime throughout that run up, right? Let's say they added, give them the benefit of the doubt. So they added in May, all right? They wrote it up, so forth. They didn't cut any of their position. If you're looking at, the quarter three, they added even more to their position. So they're long. They're clearly long in their position. Now, unless I'm reading this information wrong, okay? However, I have shown that when they are short of a position, it's identified a little bit different inside this. If I am wrong, then please somebody let me know. But also just doing kind of the numbers and seeing what was tweeted really tends to believe that, if they did get burnt this bad on the short side, chances are they wouldn't be taunting at this point. All right, they would have been negatively hurt. And then when you jump all the way back to quarter one, okay? We jump back. Quarter one, they had 127,000 shares, and they cut 50% of their position leading into that. So even if they did ride some of the January run-up, by the time quarter two came around, they were low on their position. They added into their position. They continued to add to their position, and they slowly cut coming down. So my thought process behind this, also leading into the inclusion, okay, the Russell rebalancing for AMC is this more of just, Main Street media trying to get a rile up? Is this also another fund that is really long in their position, trying to get a quick squeeze as they are now underwater? Quite possibly. Point behind all of this is twofold. One, it's absolutely hilarious what, Main Street media continues to bite on. And on top of it, if it is positive news when it comes to retail investors, when it comes to AMC, even GameStop, that always really tends, to fall to the nay side. And if it is anything that they can grab, attention on, rile people up, get views, obviously I'm looking at this article because of what it is. Therefore, they capitalize on this. As far as AMC, I haven't made a video in quite some time, and there's a couple of reasons for it. One, I will say this, the market has been very, very choppy. AMC has been stabilizing around, bouncing back and forth. They had this spike up to 16, but really bouncing in between this $10.50, and $13 for quite some time. It was just going back 30 days. They even jump back a little bit further on the 90 once it comes and breaks under the 16, which is all the way back in early May. It's really just been channeling. So twofold. One, it's not selling off and getting hurt like SPY is, okay? You watch when the CPI hit that 8.6% and SPY took a massive, massive dive down. Okay. And also it's not getting those relief rallies. So it's really starting to play individually on its own and standing a little bit more solitary versus the entire market. But as you can see here, especially when you zoom out, it's really just straight channeling until we can finally break that to the upside, move that to the downside. Like I said, we are seeing still some buying pressure coming in to the downside. When you look at overall ownership, institutional and retail, it is still holding up very, very well. But guys, that's it for this video. I wanted to make it midday and I thought it was quite ironic. I did a little bit of research to find out where potentially AQR, okay, or that guy Cliff, his interest could be. If there is something I'm missing, leave a comment down below. And if you found more information on this specifically, leave a comment down below. I'd love to hear it. So that's it for this video, guys. See you in the next one.